Ladies and gentlemen, welcome to a new episode of the Fintech Hunting Podcast. We have an amazing guest for you today. He's a technology evangelist. He's a digital underwriting guru. Please help me welcome to the show Praveen Chandramohan, Executive Digital Mortgage Underwriting Solutions at CoreLogic. Praveen, welcome to the show.
Thank you, Michael. Glad to be here.
It is great to have you. You have a wealth of knowledge and expertise. Before we dive into all of that, for our listeners who maybe don't know you or haven't had the opportunity to really hear all of your wisdom, tell us a little bit about yourself professionally, and then talk a little bit about what you specifically do at CoreLogic.
Got it. So I've been in the mortgage industry for about 20 years and counting now. I've been in CoreLogic for about 7 years, and prior to that, spent about 10 years at Fannie Mae, leading a lot of the technology initiatives under capital markets, single-family real estate valuation, modeling and analytics around the guaranteed assets and guaranteed obligations. In CoreLogic, I've had the pleasure of working throughout the mortgage ecosystem, all the way starting from rental to mortgage origination, and a little bit into some of the things that we're going to talk about with respect to borrower verification, qualification. So today at CoreLogic, I lead the mortgage origination segment with a focus specifically around borrower, focused on prospecting solutions, verification solutions, qualification solutions, all centered around the borrower. And then there's also a series of solutions that I lead that is focused more on the loan. So what is the total cost of the loan? What is the total fraud risk for the lender on that loan? So that's a general background and what I do today.
Fantastic. And our listeners, I know, are going to be excited. Hopefully they have their pen and papers out. You obviously have a wealth of knowledge and expertise in the industry. So with all of that knowledge and expertise, you've been in the mortgage space, you're leading the company's borrower and loan solutions segment. That whole segment is full of business practices, but a lot of people, now that the market conditions have gotten a little bit tougher, are saying maybe the technology in that segment hasn't been keeping up. Do you really think that's the case? And what can we do as an industry to maybe more effectively integrate technology to improve those process changes?
Thanks, Michael. I think the question is spot on. So if you start to think about where technology investments have been in the origination space, it's grown leaps and bounds, right? There were days where you had borrowers filling in paper applications. Gone are those days. Technology has grown where you now have a ton of consumer-facing technology. But what that's done is it's had a heavy focus on the consumer side of that relationship, but it's ignored the lender processes and lender efficiencies. And that's reflecting in a lot of the information analytics we've seen. So recently, MBA did a survey. They did computations around what is the total cost of the loan, and it skyrocketed to $10,000 per loan. And
wow.
And if you really start to dig into what is in that 10,000, 75% of those costs are people and payroll costs. So what's technology done is it's dramatically improved the customer experience, the consumer experience. But it's ignored the lender experience, which means lenders are still operating on top of those existing technologies. They're still operating with process optimization, people optimization, but not really having tools at their disposal to make them do things better. So that's where the focus has been. And a lot of this is also reflected in some of the surveys. So Fannie Mae recently did a survey. I think this was about 200 odd lenders that participated all across the segment, credit unions, banks, IMBs, all across that. And what you've seen is a dramatic shift in where the industry's focus was 2 years or 3 years ago versus where the focus is now. 2 or 3 years ago, number one in that were consumer-facing technologies. And now, number one is business process optimization. What can I do to bring down my own costs?
So let's dive into that a little. I'm glad you started with, back in the day when people were still doing them by hand. I feel a little less old right now. When I got in, we were talking the transition from DOS to Windows. So I understand where you're coming from there. And I think as you talk about, a lot of it was thrown on the consumer side of it. And when volumes were super high the last couple of years, what people did, and Jonathan Corr, former CEO of ICE, and Ellie Mae used to always say, what the mortgage industry has a huge propensity to do is throw human spackle at things. Oh, we've got all these volumes. Let's just throw a ton of people at it instead of really looking at process improvement. The fact that the cost to originate a loan continues to rise still baffles my mind. With all of the latest advances, with all of the latest technologies, that's still rising, which is very concerning. When volumes decline, long-term sustainability, profitability becomes very critical for lenders. So let's talk about when you're looking at that back office. Let's just call it the back office, not the consumer-facing, but that loan manufacturing stage. Where do you think the largest areas of growth are? Why do you think this shift towards integrating technology solutions especially for processing, is starting to accelerate? And where do you see that growth?
No, spot on. And just hitting on that comment, it's one of those conundrums that lenders face, right? When you're in growth mode, you don't have the time to invest. And you're in a slowdown mode, you don't want the money to invest. And you've got to break out of that cycle. And the way to do that is to capitalize on a slow time to invest in technology to grow that. So it goes right into the question that you were asking, right? So when you think about the loan manufacturing process, there's really 4 segments, at a very, very high level. Right. You got series and processes that deal with the customer acquisition. How do I go get new customers? There's a series of technology and processes that deal with the customer experience. Now that I've found a customer, how do I engage with them? And then there's 2 specific back office processes that I would largely group under processing and underwriting, and closing and funding. What we've seen is the customer experience aspect has grown tremendously. The customer acquisition is definitely a growth area, but the lender personas, if you think about the LO, the processor, the underwriter, the closer, and the funder, those are the personas that they're wanting innovation. They want solutions that can make their job much easier, and automation and simplification in that area is frankly where I see a lot of the growth is from an origination perspective. Now, if you go beyond origination, servicing, portfolio, and secondary, yep. Secondary I think is a huge investment because you could totally shift left the entire aspect of what a loan manufacturing process, because every loan has a destination in its secondary market, but that's for another day. If I stick to origination, I would say the lender experience is definitely a growth area from a technology and investment perspective.
Let's dive into that a little bit more. Naturally, when a home is originated, it's not just lenders that benefit from that speed and efficiency in the process. There's all those who are purchasing the properties, but one of the big kinks, one of the things that's still holding us back in that process is borrower verification. So can you talk to me a little bit about how important automating that process is for both parties?
Yeah, so talking about the borrower experience, I'm going to notch it up a little bit higher and get to the verification aspect immediately. We've seen in the last 2 years where borrowers were putting in loan applications, waiving all contingencies, and promising the seller for a 20-day close. Now, if you're a lender and if you want to support that borrower, how do you tell the borrower with a straight face that I will get you a 20-day close? You got to know 2 things, right? You got to know whether the borrower qualifies. You got to know whether the property qualifies. And if you're able to shift left all of this intelligence at the time of application, imagine the experience that the lender and the borrower would have, because the borrower at once would know that, look, this is going to be a rough ride for me. Let me go back to my seller and say, this is not going to close in 20 days. Can we reset the expectation around this? Or if we can enable the lender and the borrower to have that conversation and say, look, these are the things that you can do today to get to your 20-day close. Let's start doing it right from day 1 and not at day 10. And that's what I mean by an efficient borrower verification. Because if you're able to effectively shift left and handle what I call 100% borrowers or no borrower left behind. If you think
Yep.
about that strategy, a lot of the solutions today focus on the happy path. You're able to automate and instantly verify, but then once you get off that swim lane, what happens? And now you get into this long, elongated back and forth that increases customer frustration. And in the days where the profile of that modern borrower is gradually shifting to be typically a multi-income type borrower, bringing in their spouse into the mix, bringing in rental properties as a source of income, bringing in investments as a source of income. Now, all of a sudden, that journey becomes a lot more harder than a typical engagement that you would see. Oh, I just go work here, I get a paycheck, and that's it, right? So that's shifting that, having that ability to deal with all of those complex situations and making that interaction as crisp as possible. So when you're able to set that expectation, that's what a good automation and experience would look like. And we're getting there. We will get there.
Well, and I love how you talk about when you have the right data at the right moment in time, you can set the proper expectations. And I love how you phrased it. If you want to be able to close within 20 days, these are the steps that need to take place.
Exactly.
Then you've set that expectation and you've improved the borrower experience because they're not thinking, okay, I'm going to close in 20 days. And then they didn't get you half the information until day 18. Well, you and I both know you're not closing. I mean, it's not going to happen. And so as you talk about the technology, what are the solutions then that people should be looking for in that cycle that you're talking about? How do they move things to the left to get that valuable information at that point?
Yeah, so the industry has actually made several advances, right? So you're seeing the likes of instant employment verification. Fannie Mae and Freddie Mac are all championing the ability to get all of this information from bank statements. So there's a lot of technology that's happening, and CoreLogic, especially my team, is also investing. We're creating a platform called Automatic Borrower, and it's exactly intended for that purpose, which is, can I give you the maximum information at the time of origination, at the time of application, and deal with it in a way where we're saying we're providing you a single framework around which you can operate, not just answering the question about what does a lender need in order to verify and qualify a borrower, but can I also answer the question, can I help you with why you need it? You are getting all this data, but you're really doing it for making that qualification decision. If I can inspect the data, provide you that analysis tool to say, look at this borrower, these are the things that you need to be asking for right now on day one, then you're going to get a more efficient close. And you'll know right off the bat, does this borrower have the right propensity to pay, capacity to pay, all of that before you proceed, so then you can set that expectation right at that time.
Well, and that is so true. And I think those are some of the key elements. If we want to lower the cost to originate and really streamline that process, we have to address those. Well, one of the other challenges in today's market, we don't have those huge volumes from a year or two ago, right? Origination volumes have declined. So what are things that lenders can do to find more borrowers? Because that's becoming more and more challenging. Talk to me kind of what are some of the things from a technology and what are some of the things that you see that can be done to really grab more of that attention of that potential borrower?
Yeah, so that's a huge passion of mine, right? So this is where I think there's a lot of growth from a technology perspective. Today, if you look at that landscape, it's largely reactionary. And what I mean by that is, if a borrower want to project themselves out there, they would go to the large lead aggregators and they would express interest and say, look, I'm looking for a lead, I'm looking for loans, who has the best rate. So you have that source of input, or the other source of input is really triggers when the borrower's already engaged with someone. And then lenders look at, oh, this is an interested borrower. Can I go now talk to the borrower? But oftentimes, you'd find that it's too late, right? So you have customers who are saying, I wish I knew my own customer is shopping for a home because I had the right product, but I did not get an opportunity to talk to them because I didn't know that they were shopping, right? So this is where I think I'm extremely proud to lead an initiative we call Prospecting Solutions, where we're not only bringing the verification and qualification aspect, but we're bringing the intent aspect.
That whole purchase intent, right?
Exactly, right? So how do I know that this is a borrower with intent? And frankly speaking, the mortgage market from a marketing perspective is a little bit behind the curve when it comes to retail, right?
Yep.
Use of mobility technology, use of geospatial information is not prevalent, and we're actually unlocking that with a probably the most innovative solution that is out there in the market. We had a huge successful demo at the Digital Mortgage Conference where we were able to show that when you combine the power of geospatial characteristics of a property, when you come and then you add on propensity models and forecasting models that talk a little bit about the characteristics of the property and layer in the intelligence around the mobility of households and detect a shopping pattern, now all of a sudden you're able to provide a more laser focused persona to a lender where they can now engage the customer even before they're out there looking for loans. Can say, look, I can help you. These are the products that we can do. Establishes that communication well ahead in the journey, and then they can keep their customers.
Very exciting. And Praveen, will you be meeting with people at MBA Annual to discuss and show more of that purchase intent and all of the technology that is around that?
Absolutely. In fact, two of my key focus areas at the upcoming MBA would be around the purchase intent and to demonstrate the power of automatic borrower, which is our solution around the verification and qualification. Frankly, I view these as needle moving from a efficiency perspective. It solves the two most pressing problems today. How do I get more business, and how do I do it at the lower cost? And our solutions are right smack catered to that.
Fantastic. What else is CoreLogic working on, and how are you guys supporting growth and change in technology?
So that's a very good question, and frankly, will require a whole another podcast about this. But if you think about CoreLogic, extremely proud to be working here because it is uniquely positioned to look at the entire ecosystem, not just from a mortgage lens perspective, but from a lens of the journey of a consumer. So it starts with a consumer wanting to find the home, right? And it starts with the real estate segment and how do we provide tools and provide a seamless experience for realtors to conduct their business. So there's a whole bunch of innovation that's happening there to provide data and analytics to the realtors so they can be most efficient in their jobs. And we've talked a little bit about the mortgage segment. What we did not touch about is the power of CoreLogic's data and analytics. So things like, can I help a lender make quicker decisions on qualifying a property by applying image analytics on top of that, providing property characteristics on top of that, so they can make more timely decisions and they can make a risk-based decisions when they're originating a loan. And if you extend that concept to companies that service loans or companies that hold on to portfolios, you can now evaluate the impact of climate change and natural disasters because you now have the power of all of the data down at the parcel level, at the each property level. So you're not making assumptions, you're making precise decisions based on that data that's coming in. We also serve the insurance segment in terms of insurance underwriting, claims management, reconstruction cost estimations. So there's a whole bunch of technology. When you look at the spectrum, we're across the board, which allows us to look at this holistically rather than pinpointing at a certain area. Just as an example, I would throw out recently there was a huge catastrophe that hit Florida, Carolinas, Hurricane Ian, large damage, heartbroken to see a lot of the damage. But then as a lender who wants to do business, or as a servicer who is owning that portfolio, or as an insurance provider who is insured a lot of those properties, how do you know what your damage is? How can you get ahead of the curve? And that's where our data and analytics will start to help, right? So as an example, we've estimated about 66,000 mortgage originations that are in flight were at risk. Now, it
Wow.
would be great for the lenders to know, I know exactly who those 66,000 are. Can I reach out to them and can I help them? We've estimated about 40 to 70 billion dollars of flood and wind damages created by Hurricane Ian, all tied down to basic individual property level. If I were holding that property in my service portfolio, or if I were insuring that property portfolio, I would want to know that information. So those are the kind of things that we can help and really help manage our customers in making sure that they make the right business decisions. And the power of data and analytics, providing that right information at the right time, becomes very important.
Praveen, great insights. I mean, I hope my listeners went back, took notes. They're going to go back and replay this. You and I could talk for hours. Before we end, if people want to meet with you or your team at MBA Annual, what's the best way for them to get a hold of you?
So, CoreLogic, we have a large presence at the MBA. We have a booth. Look for our signs. We're going to be having our badges. I would welcome and enjoy any conversations around how do we move the mortgage industry forward. So I look forward to meeting everybody at the MBA.
Outstanding, Praveen. Thank you so much for being a guest on this episode of the Fintech Hunting Podcast.
All right. Thank you, Michael.